From celebrity endorsements to social media feeds, red light therapy devices are everywhere, promising miraculous benefits from wrinkle reduction to muscle recovery. This burgeoning industry, once a niche health modality, has transformed into a multi-billion-dollar market, captivating investors and consumers alike. But beneath the warm, inviting glow of these devices lies a critical question: is this exponential growth a testament to groundbreaking science, or is the market being inflated by a narrative of cellular fiction? We're diving deep into the financials, the claims, and the compelling data behind this red-hot trend, scrutinizing whether investor confidence truly aligns with scientific consensus. The numbers speak volumes about red light therapy's rapid ascendancy. Market intelligence reports indicate a staggering trajectory. In 2020, the global red light therapy market was valued at a modest $250 million. Fast forward to 2023, and that figure has quadrupled, nearing $1.2 billion. Projections are even more audacious, with some analysts forecasting a compound annual growth rate exceeding 25% to reach $3.5 billion by 2028. This isn't incremental growth, it's a financial supernova, driven by direct-to-consumer sales and aggressive marketing, largely on the promise of biohacking and anti-aging benefits. Venture capitalists and private equity firms have poured hundreds of millions into RLT startups. A prominent Series B funding round for a leading at-home device company recently hit $75 million, pushing its valuation past $500 million. This influx of capital fuels innovation, but also raises questions about due diligence. Are these valuations based on robust clinical trials, or the speculative potential of a wellness trend? The market is betting on the latter, often prioritizing rapid user acquisition and brand building over long-term efficacy studies. This speculative bubble mirrors past wellness booms that eventually faced a reckoning when scientific proof lagged behind market hype. Proponents of red light therapy point to photobiomodulation, PBM, suggesting that specific wavelengths of red and near-infrared light penetrate tissues, stimulating mitochondrial function. The core hypothesis is an increase in ATP production, cellular repair, and reduced inflammation. Claims range from enhanced collagen synthesis for skin, faster muscle recovery for athletes, and even neurological benefits. On paper, the cellular mechanisms sound plausible, engaging with fundamental biological processes. This scientific-sounding narrative forms the bedrock of marketing campaigns, lending an air of legitimacy to products sold directly to the masses, often without rigorous medical oversight. While the theoretical mechanisms for red light therapy are intriguing, robust, large-scale, double-blind, placebo-controlled human trials are notably scarce. Many positive studies are small, privately funded, or suffer from methodological limitations. For instance, a 2022 meta-analysis reviewed 30 clinical trials on RLT for skin rejuvenation, finding promising results but concluding that the overall quality of evidence was low to moderate. This critical data deficit creates a significant disconnect between marketing claims and verifiable efficacy, leaving both consumers and investors to navigate a landscape where anecdotal evidence often outweighs rigorous scientific proof. The burden of proof, in a medical context, remains largely unmet. The regulatory landscape for red light therapy devices is complex and often ambiguous. Many devices are marketed as wellness tools or general-purpose lights, allowing them to bypass the stringent approval processes required for medical devices. The FDA, for example, might clear a device for general wellness if it doesn't make specific medical claims, a vastly different standard than our approvals for treating a particular disease. This regulatory gray area enables manufacturers to sell devices widely without the rigorous scientific backing that would be mandatory for pharmaceuticals or established medical therapies, creating a lower barrier to market entry but potentially higher risk for investors and consumers relying solely on marketing claims. The lion's share of RLT market growth comes from direct-to-consumer sales, fueled by aspirational marketing and the pervasive influence of social media personalities. Celebrities and wellness influencers often showcase these devices, creating powerful testimonials that bypass traditional scientific vetting. consumers, eager for anti-aging solutions or athletic recovery hacks, are spending hundreds, sometimes thousands, on at-home units. This dynamic creates a high-margin business model, but also places significant pressure on companies to maintain the magic narrative, even if the underlying science remains embryonic. The psychological impact of feeling better can be a powerful sales driver, regardless of objective physiological changes. The valuation gap in the red light therapy sector is striking. While individual companies boast market capitalizations in the hundreds of millions, and the overall market approaches multi-billion-dollar figures, the volume and quality of independent clinical research supporting these valuations often fall short. Publicly traded companies in the RLT space, though few, exhibit volatile stock performances, reacting sharply to both positive anecdotal reports and skeptical scientific critiques. This volatility reflects investor uncertainty about the long-term viability without more definitive scientific validation. Without robust clinical data, these companies are essentially valued on market sentiment and speculative future potential rather than proven, reproducible health outcomes. So, is red light therapy a true cellular breakthrough or a fleeting financial bubble? The answer remains nuanced. The science on photobiomodulation is evolving, and potential benefits certainly exist for specific applications. However, the current market valuations far outpace the breadth of definitive, gold-standard scientific evidence. For investors, this presents a high-risk, high-reward scenario. Those who navigate this space require rigorous due diligence, prioritizing companies committed to genuine scientific validation over pure marketing spectacle. The long-term health of this market hinges on its ability to transition from a wellness trend built on cellular fiction to a medically validated therapy backed by robust, independent research. In conclusion, the red light therapy market is undeniably vibrant, attracting significant capital and consumer interest. Yet, its explosive growth exists in a delicate balance with the foundational scientific evidence. While preliminary studies offer intriguing possibilities, the broader market narrative often outpaces rigorous clinical verification. For consumers, informed skepticism and realistic expectations are paramount. For investors, the challenge is discerning between genuine innovation poised for medical integration and speculative ventures built on hype. Until the science catches up conclusively, navigating the red light spectrum demands an analytical lens, separating the glow of market excitement from the substantiated illumination of cellular truth.